Yo, welcome back. In this section, I'm going to be going over imbalance, how you could use it for market influence on where the market's going to go, and how you could use it on the higher time frame to trade on the lower time frame into that point of interest. So let's get right into it. This is the live market. Market's closed right now, so price isn't going to go nowhere. But what I see right here is major imbalance. Where? Well, it's right in front of your eyes, right here. This is inefficient. It's inefficient price action. All this right here is efficient price action. Why? Because there's no gaps. There's no gaps in the market. Inefficiency, IPA, is inefficient price action. It's when there are gaps in the market that need to be filled. So right here, you had an inefficiency right here. You had one, right here. You got a big one right here. You got one right here that got filled. So basically being put in balance is markets in the area that are inefficient that need to be fulfilled. So what I see right now is price can come up and we'll take out all this to then continue to take out all these, continue to drop, because on the bigger time frame we have tons and tons of imbalance. So like this is imbalance, this was imbalance, this was imbalance, this was this was at the time, this was imbalance. You guys get the idea, right? Imbalance filled, imbalance filled, imbalance filled, imbalance filled, imbalance gonna be filled, imbalance gonna be filled. Okay, so if you guys want a better explanation, we will do this. Okay, so say we had a full bearish candle right here. We had some wicks right here, and then we had this candle right here. Okay, this isn't the best, but where's the imbalance? Right in here. Why? Well, it's inefficient. It's a gap. There's no wicks on this part or this part of this candle that are lining up together. So if price was like this would be efficient. This would be efficient price action because market is consistently moving down. It's not just going straight down. It's having a little bit of, in the moment during that candle, pullbacks, fulfilling every gap that's being left. So being put, if there was, like I said, no wick on this one and no wick on this one, and there was this inefficiency right here, this is imbalance. So imbalance, efficient price action, and that is why I mark it up always as IPA. It's just always how I've done it. That's how I go by. Inefficient price action. So now, if price were to be efficient, the wicks on opposite sides of the candle will meet, and there will be no gap in between them. Okay, so when we look for a balance, this is the left side candle, this is the right side candle, and this is the candle that we decide if it's inefficient or efficient, right? So just like I put on a regular chart, let's move this out of the way. see. Let's go down to the lower time frame. Let's look for a good setup. Okay, perfect. So, what did we have? We had our demand, and we also had an efficiency right here, because this candle did not come down to meet this candle. So if price was like this, it would have been efficient, right? There would have been no gap. But since price didn't do that, price left a gap in the middle of these two wicks. Again, my arrow right here and right here, it left this gap. So price needed to come back down to fulfill this inefficiency, this imbalance, this fair value gap, whatever you want to call it, to come into our demand zone to continue up. And what did we also have for more confluence? This huge inefficiency right here. Like I said, if it was efficient, price would have had wicks coming down and coming up to meet each other on opposite ends of this candlestick right here, making it efficient. But once again, price didn't do that. Price left a huge gap in the market that needed to be fulfilled to make it efficient. So price comes down, taps into our imbalance. Price taps into our demand zone. Price immediately rallies up, fulfilling this imbalance, so making this price efficient, this candle efficient, to then take our profits. So once again, entry with major confluences, take profit at the high, and that's really it. That's imbalance. I can go over some more. So basically, when you're looking at the market, you want to see where there's gaps, because gaps always need to be filled. And now if you're entering, say you enter right here, right? Once price does tap into your demand zone and fulfills this efficiency, you see that there is imbalance right here. So price needs to come up at some point to take this out. Now, can price continue down? It could, but with this being filled, this is the next gap that needs to be filled. There's also a gap right here. So immediately price fulfills that, and price fulfills the next gap, making this move efficient and this move efficient. Pretty much, it's all banks, the whales of the market, the big orders. These are all big orders that push us up, big orders that push us down, right? So they want to come back down to collect all their orders, all their money, to continue up, to stop more traders out, to collect more money, collect more orders, and they just keep repeating that cycle. Now for more confluence, like I said, this was liquidity, so we wanted to target that along with the imbalance. Again, on the even higher time frame, the 15-minute was filled, so that was a perfect reasoning to buy up. And before you know it, this was Asia, started Asia, so it might have broke it. It did, but if this was New York, it would have taken this out. But that's why I don't backtest anything but New York, because sometimes, usually, I'm gonna be honest with you guys, this strategy won't always work in Asia or London. That's why you see me only trading New York, because that's what I've learned from experience. It's the best way to trade, how I trade. Just like you see, price can come up and hit whatever it's got to hit. Now if you look on the lower time frame, it was probably a supply zone up here. If you want to see, there was. Okay, so once again, where could we have targeted? We could have targeted this supply. Okay, now why would we target this? Because there was inefficiency up here. Price tapped into it and then fell. but it didn't tap into our supply zone, so we waited, and then price hit our TP, and then took off to the downside. So this was Imbalance, quick video. Hope you guys enjoyed. I'm out.